responsibility on the internal auditors to achieve a fine balance between saving money for the company by availing credit on all eligible inputs and making sure that they are not taking too aggressive a position when it comes to compliance. The role of internal auditors as far as GST is concerned is very vast. It ranges from just ensuring basic compliance to making sure that there is no excess liability or short availment, whether ITC reconciliations are done properly, compliance with reverse charge mechanism, have ERP systems of the company been made GST compliant, etc. So scams like the one discussed before have made it imperative for internal auditors to have an in-depth knowledge on a lot of GST matters. So with this, I would like to introduce today's speaker and presenter, our knowledgeable speaker, CA Surbhi Premi, who has worked extensively in the area of GST and service tax and has vast knowledge on the subject. She is a joint director at Lakshmi Kumaran and Sridharan and has previously worked in Goldman Sachs. In her current role, she advises clients in various industries, including real estate, logistics, tour and travel, hospitality, oil and gas, healthcare and information technology, and e-commerce on a range of GST matters. She is also an empaneled faculty with ICAI and often is invited as a speaker. She has conducted various seminars and webinars for businesses and students and has authored various articles which have been published in reputed newspapers and tax journals such as the Hindu, Business Line, Financial Express, and leading Asia law journal, namely India Business Law Journal. In this meeting, she will discuss with us some very interesting issues on GST, including invoicing requirements, reversal of ITC, creation of self-invoice for RCM payments, etc. While Surbhi will be addressing some of these questions during the presentation itself, we would like to hear from our audience also. So please post any questions that you have in the chat window, and we will take it up after her presentation during the Q&A session. I hope you find all this, find the session really interesting. I now hand over it to Surbhi to start the presentation. Thank you.
Yeah, and while Surbhi is just putting up her presentation, I would specifically mention the presence of our guests from BVSS Delhi chapter, Vipan Agarwal ji, President, and Puneel Agarwal ji, General Secretary from BVSS Delhi. They are both GST experts. They have written books on GST and which are very popular. So I request both of you also to pitch in, wherever you require, sir, or wherever you feel, please feel free to, pitch in with your comments. Thank you.
Navalji,
what you should
do. Thank you, Naval. Thank you, Radhika. I express my gratitude for the entire panel. And now we would start. So firstly, as Radhika has already set the context why we are discussing the law for the internal auditors, regarding the importance of compliances and the kind of shape the compliances have taken. We would be discussing some of the provisions on that later on also. Apart from that, I wanted to discuss one more thing, that basically input tax credit is a ready asset or cash in your hand. So it is very important that you maximize the eligible credit in your hand. That would have impact on your pricing as well. So with this, we can move to the next slide. So as a part of the today's discussion, we would be discussing few of the aspects for which you all of are masters: procure to pay, order to cash, hire to retire, logistics and distribution. I'll be giving some examples of structuring also, where we are doing the same transaction in different ways, and each of the way carries a different implications. And of course, then reporting and compliance and how it has impact on running of your business, not merely just penalties, etc., but also how you'll not be able to run your business efficiently in case you are not compliant. So we can start with the procure to pay. Next slide. So firstly, when we talk about procure to pay, it is a term which is used in internal audit context. However, in GST, it is wider, because whatever you are procuring, that is not necessarily for the purpose of payment, but it can also be a transaction with your distinct person. So in GST, there is a concept of distinct persons where all your branches in different states have been considered to be different persons. So any transaction between the branches of the same entity would also carry implications of taxability. To say stock transfers would be liable for tax. Vishali, next. So firstly, we are discussing about invoicing. Probably one might think that invoicing is a better topic for my outward side when I am issuing the invoice, but I am discussing this topic in the context of procurement. And why? Primarily for two reasons. Number one, if you want to avail ITC, the particulars in the invoice that you are receiving, that should be correct. Now, there are certain particulars which have been prescribed for invoicing, but there are certain minimum particulars which makes you eligible for the credit. For example, the description of the supplier, goods, services, their HSN, value, tax amount, etc. GST and place of supply. So these are the bare minimum particulars which should appear correctly. Now, the second most important thing is the validity of invoice. So somebody may think, if I have already talked about correct particulars, what remains to be discussed about validity? Now, validity is more significant term in comparison to particulars when I talk about it. So as all of you would be aware that e-invoicing has been made mandatory for all the businesses whose turnover is more than 100 crores. So in the context of B2B supplies, you are required to issue e-invoice, and this turnover has to be seen in preceding 3 financial years starting 2017. So now there is a provision which says in case e-invoicing is applicable on the supplier, but that person is still not issuing the e-invoice and is still continuing with the earlier practice of issuing invoice through the SAP without registering it on the IRP portal, then it shall be considered as if no invoice has been issued. So it has severe implications in the sense, if there is no invoice in the first place, you will not be entitled for credit. Secondly, if you procure goods without issuance of invoice, it is a serious offense and certain penalties are attached for procurement of ITC without a supportive, correct and valid invoice. So therefore, it becomes very imperative for the buyer to see whether your supplier is liable for e-invoicing. If yes, in that case, any invoice other than e-invoice would be invalid and your ITC cannot be based on that.
So Surbhi, that's a question here I have. Now, how is it practically possible for a company to ascertain whether their suppliers are liable for e-invoicing? This is based on a certain turnover, right?
Yeah.
So how is it possible for a company to assess it? And how does a business safeguard itself for default of its suppliers?
Okay, it's a good question. So basically, you need to know turnover of your suppliers for previous 3 financial years, because if in any of the financial year the turnover exceeds 100 crore, e-invoicing becomes mandatory. Now, first thing I want to clarify here is this turnover is a GST turnover and not the financial turnover which is available in the financial statement. GST turnover would also include the value of stock transfers, cross charges, etc., which is happening between the branches. So this is number one. Now, how to know this? There are certain press release and clarification from the department that they have developed a utility on e-invoicing portal where you can see the turnover of your supplier so as to check whether they are correctly invoicing you as per the provisions of e-invoicing, but with the caution that the turnover that is there on the website which they are displaying, that is only the turnover coming from their returns. So if somebody has not filed proper return, that turnover would not be appearing. And also there are certain exceptions where e-invoicing is not required. For example, banking insurance company, for example, passenger transportation services. So any kind of airline or otherwise, those companies are exempt. So even if you see a turnover there exceeding the threshold, not necessarily they are required to do the e-invoicing. So in this case, what is very important is to safeguard for the default of the supplier. So legally what you can do is, number one, you should have undertaking from their suppliers stating whether they are liable for e-invoicing or not. And secondly, in that undertaking or in your contracts, some clauses should be built for safeguarding your interest, that in case the e-invoicing was applicable and the invoice was not issued in accordance with that, so all kind of cost, losses, etc., which the company incurs would be indemnified by your supplier. So those kinds of safeguards are required, for the reason even that utility will not give you the exact picture. I hope this answers, Radhika.
Yes, Surbhi, thank you very much.
Okay, so we'll move to the next slide. Now the next is reverse charge mechanism. In GST, as it was there in service tax also, the liability to discharge tax has been cast on the recipient in certain cases. So take an example of goods transport agency, lawyers, rent-a-cab services, etc. With certain conditions, there is a requirement of reverse charge. And also for import of services, there is a requirement of reverse charge. So whenever you receive a bill, you should be careful whether that triggers a reverse charge liability that you should discharge. Now, the question is whether the reverse charge mechanism is applicable in case of import of goods also. So I would say that import of goods is dealt with separately, where with the bill of entry, you need to discharge IGST also on import of goods. But yes, definitely that is not a reverse charge mechanism, though you are paying under reverse charge as such with import of goods through bill of entry. Now, one significant question is, if in case I am paying duty as import of goods, IGST as import of goods, so can still be there any sort of reverse charge on me? So my answer to that effect would be yes. So take an example of ocean freight. So ocean freight is a scenario where you are importing goods from a vendor situated outside India, and assuming your contract is on CIF basis. So basically the shipping line has been engaged by the exporter and not you. And the value of freight has been included in the value of goods. In that case, there is a provision and a notification which says that the person who is importing the goods would be liable to pay tax under reverse charge on the value of freight amount. So if we look at it, we feel that there is some problem with this provision. Number one, for the reason that your act says only the recipient of service can be made liable. Here the recipient is the foreign exporter who has engaged the shipping line, and they have made liable the importer of goods. So the constitutional validity of this provision was challenged before Gujarat High Court, and they ruled that no GST is payable because notification cannot override the act as such. However, you would need to take a commercial call because it is definitely litigative. So in case ITC available to you, then instead of going into litigation, you can pay and then take credit. So for discharging reverse charge, if the supply has been made to you by an unregistered supplier, you need to issue a self-invoice on yourself. Self-invoice is not required to be complied with e-invoicing provisions. It has been clarified. And lastly, for reverse charge, you need to discharge tax in cash amount and credit cannot be utilized. So this is the brief about the reverse charge mechanism that I wanted to discuss, because when you procure at that time, this liability is also triggered.
Surbhi, there is one question here that the audience had, so I would like just pose that to you. So is GST payable on reimbursement of expenses incurred by employees through corporate credit card to parties outside India? Like sometimes you pay subscription fee for LinkedIn. So the employee pays that to the corporate credit card and later gets reimbursement from the company. So is GST payable on these?
Okay, so basically where the payment is being made by the employee using his credit card, and later on it is getting reimbursed by the company, then there is a possible call to say that no GST would be applicable because this expenditure has been made in the course of employment. So that is a possible call, but again it is disputed. So company can see whether they want to discharge tax under reverse charge, because ITC in any case available of this particular expenditure. Radhika, this reminds me of one more thing about rent-a-cab reimbursement. So many of the times employee hires a cab, they make the payment and then take the reimbursement from the company. Now in few of the scenarios, rent a cab, the tax has to be discharged by the recipient company. So here also I have seen practically client asking us whether reverse charge is applicable in case you are reimbursing it and not paying directly to the cab, and the invoice is issued in the name of employee, etc. So same here, you can take a call that it is in the employment, in the course of employment, and therefore no reverse charge, especially for the reason for rent a cab, most of the cases no ITC is available. Vishali, next. Now coming to the input tax credit, the basic. So basically there are three items for which you are entitled for credit. One is input, other is input services, and third is capital goods. So here I just want to highlight two important points. Number one, these terms have been defined broadly in GST as compared to earlier regime, in the sense that you need not to draw a nexus with your output operations or output supplies. If anything is used in the course or furtherance of business, you will be entitled for credit unless it has been barred specifically. So this is one thing I wanted to highlight. And second is the term capital goods, because most of us are practicing CAs. So what like we are more familiar with income tax. So what we think, we sometimes tries to equate the term capital goods with capital assets. So they are two different concepts. Any kind of capital expenditure cannot be a capital goods. Capital goods can only be the goods, because the definition as such says the goods which are not inputs. So any kind of capitalization to the capital goods would still be a service if the expense incurred is a service. Next. Now it is important. What we are discussing now is really important, because as internal auditors and executives, we need to build some control around our ITC. There are certain conditions attached when we avail credit. Number one, the goods or the services that you are procuring should be used in the course or furtherance of business, meaning thereby it should not be meant for personal consumption. Secondly, you should have a valid tax paying document. Third, you should have received that particular goods or services. So they have carved out one exception of bill to ship to transaction, where you receive the bill but the goods are shipped directly to the third party. Even if you are not receiving the goods, you have been deemed to be a recipient and credit has been made entitled to you. Now, fourth condition is the one on which there is lot of litigation and the constitutional validity itself has been challenged. This provision says that you can avail credit of the tax only when your supplier has paid the tax to the government kitty. Now, it is something which is practically impossible for the recipient to ensure and to know whether your supplier is discharging the tax to the government kitty. Once you have paid the tax to your supplier, whether it is your responsibility to ensure. So there are many writ petitions on this particular aspect, and this position is still not settled. So till the time this position is there in the statute book, you need to build some safeguards where at least you have some indemnity clauses in your agreement, etc., in case of non-payment of tax by your supplier to the government kitty. And the last is the furnishing of return so as to avail credit. One more important change which this budget 2021 has brought is the invoices which your supplier is issuing unless and until your supplier has filed GSTR1, which is primarily the detail of outward supplies, you will not be entitled for credit. So it was there earlier also. Department was trying to enforce this condition even without the absence of this provision. Now it is there in the statute book.
So Surbhi, just that you made this point, I wanted to know, doesn't it sound a little unfair that a person who is penalized or deprived of some benefit because of other party's default here, if your supplier has not filed the return, you don't get input credit? Is that fair?
If you ask me, it is not fair. Provision was there in some earlier VAT regime also in certain states like Maharashtra, MP, etc. So we have couple of high court decision at that time where most of the high courts have held that it is not constitutionally valid. You cannot penalize or deprive of some benefit to the recipient basis the default of the supplier. But we have some decisions, for example, Bombay High Court, which held against the SSC. So they said that ITC is a concession granted to you subject to certain condition. So they have every right to put certain conditions around it. So we have decisions of High Court from both the sides, and the matter is still not settled. So I would say better to build up controls around it unless the position is settled.
Right. Okay. Thank you.
Okay. So now I am discussing about further few more conditions. One, it says that if you avail the credit, but you don't pay the tax, the value of the consideration and tax to your supplier, you need to reverse your credit. And the time given to you for making payment to the supplier is 180 days. So you need to ensure that the payment is made to the supplier within this timeline. Otherwise, firstly, you need to reverse. Secondly, you need to pay interest also on this reversal. And the last thing is, there is a sunset. So what is the timeline for availment of credit? They say the financial year relevant to the invoice, you will be entitled for credit by September month following that particular financial year. So we have to take into account this particular condition as well, because if you miss out on taking some credit in your books, the credit would be gone forever after September month.
So Surbhi, in the case of other than September, right, within the year, if I make a payment beyond 180 days, is that a permanent disallowance, or in that case, I am eligible to take the credit after I make the payment?
Sorry, I missed that. I should have mentioned that in case you paid in future, whenever you paid, you will be entitled for credit. Number one. Second, the question can arise whether I'll be able to avail credit even after September month, because there is a sunset clause which says that credit cannot be taken after September. So again, there is no explicit provision to that effect, but again, we have certain court cases which have said that if you reverse a credit and re-avail, that time limitation would not be applicable. So you can avail this credit at any point of time after making payment.
Okay, thank you, Surbhi.
Okay, so I was saying that now the definition of input services and capital goods is too broad, because they are saying use in the course or furtherance of business without drawing a nexus with your output operations, but of course with certain exceptions. So those kind of exceptions are many. I am discussing only few illustrative items. So number one, goods lost, stolen, destroyed, written off, disposed of by way of gift or free sample. Now, my attempt here is to give example where I have seen practically companies are not doing it correctly. So one of the term used is disposed of by way of gift or free samples. Now the question arises, if I distribute certain goods to my dealers with company logo, so whether I can still retain credit on those goods because these goods have been used for the promotion of business. So here one thing to be noted is this particular list is non-obstantive, in the sense even if you are using something for your business, you will not be entitled for credit. When you distribute goods for your promotion also, there are no conditions attached to it. There is no quid pro quo that you are going to receive from your dealer. So they basically constitute a gift only, and therefore no credit even if you put a logo on that. Now the next is goods or services received for construction of immovable property. Again, all these entries have been subject to a lot of litigation, and this second one also, it is not an exception. If you procuring goods and services for construction, now this immovable property can have various purposes. You may use it as your own office, you may rent it out, or you may sell it after construction. So they say credit is barred if you are using this immovable property on your own account. So basically, if you are selling it off, credit is available, and that too during construction phase, not after completion certificate, I meant here. So second is, when you are using it as your own factory, as your own office, then credit is not available. So these are two clear cases, and the dispute lies in third case, which is basically rental. For example, there is a developer who is getting building constructed, commercial malls, etc., and thereafter the shops would be leased out. So whether I can say it is on my own account. So this has been a bone of contention. There is a Odisha High Court decision which gives relief, but it is still not settled. There are writ petitions which are pending before other high courts. So again, I would say credit is eligible only when it is used for further construction of a building which you are meant to say. Third is renting of motor vehicle having approved seating capacity of not more than 13 persons. So basically, if the company is hiring the cab or some vehicle for the transportation of its employees, this is just one example. So this entry says no credit. If it is a bus, it has capacity of more than 13%, then there is no bar. But if it is a car or a cab and the seating capacity is not more than 13, no credit. Now question arises, one we have already discussed when Radhika posed a question. What if the employee is booking, getting invoice in his name, and I am reimbursing it? You can, in that case, we have discussed it from the perspective of reverse charge, and also when it is on the employee, the entitlement at the end of the company does not arise. There is one exception. If the renting services has been used for further transportation of passenger, you will be entitled for credit. Now the question is, when company gives services to its employees and they make some recovery for that transportation, maybe some nominal charge. In that case, yes, you are providing a service, you will be discharging GST, you will be entitled for credit. But if it is in the course of employment, you are providing free cab services to your employees, you will not be able to take any credit for that. There are few other items like food and beverages, outdoor catering, health services, insurance, etc. We have one segment on employer-employee. I'll be discussing in detail these entries at that time. Now, coming to the reversals, you are entitled for take credit on your taxable supplies where you discharge GST. If your supplies are exempt, you are not entitled for credit because there is no, the credit chain itself is broken. Now the question arises whether I'll be able to take credit on export because I am not liable to discharge tax on exports and they are zero rated. I wanted to clarify that export and exemptions are two different concepts. Exports are not exempted but zero rated. Therefore, you will be entitled for credit even if you are not discharging any tax on your output supplies. And the last one is SEZ supplies. SEZ supplies are also zero rated and therefore you will be entitled for credit. For exemptions, no. Export and SEZ supplies, you will be entitled. Next. This is very significant for all of you, vendor due diligence. It has taken a significant shape in GST regime for the reason that your ITC is dependent on your supplier being compliant. So one of the condition we have already seen that you will be entitled for credit when your supplier has discharged the tax to the government kitty, and other which is added by this union budget is reporting of supplies by your vendor in their GSTR1. So in case your vendor is a defaulter in filing of the returns, you are also deprived of your credit. Even if you are tax compliant, you are discharging all your liabilities to the government, you are also paying to your vendor. Still, there is no credit. Therefore, it is very important that you do your vendor listing very diligently, and the consequences are really now we discuss about the consequences, and they have severe impact on the business. Number one, ITC disentitlement that we have discussed, and other is blockage of electronic credit ledger. So if they feel that your supplier is not discharging tax to the government kitty, or your supplier is not into existence at whenever they make any inquiry, in all those cases they have a power to block your credit ledger. So as such, the provision provides that blockage of credit only to that extent, but practically I have seen that they block entire credit ledger on the default of one of your vendors. Therefore, it becomes really relevant that there is a proper vendor listing. Penalties and prosecutions. So there are provisions which says that if the supplies are made without invoices or without valid invoices, in that case the person who is taking the benefit is liable for equivalent penalty, tax equivalent penalty, and also if they are able to prove intention to evade, there are prosecution provisions also. So basically the main grounds for prosecution these days are where the goods or services are supplied without invoice, or where invoices supplied or goods are not supplied, or vice versa, you are supplying invoice without your supplies. Those are the serious offenses, and not only the supplier but also the recipient is liable. In this union budget, they have even strengthened or increased the power of department, wherein they have provided that even the provisional attachment kind of scenarios, they have been made applicable on the person who is deriving the benefit out of that transaction. So now they are not limiting the consequences only on the supplier, but also on the recipient. Next. So we can now move to the next segment, which is your supply side. So Radhika, do you want to take up any question on this segment, or I should continue?
No, nothing now, Surbhi, nothing.
Okay. So now coming to the next concept of order to cash. Now basically again this is an internal audit term, order to cash. So basically you are realizing the consideration for your sales, but GST has again widened it because I was discussing the concept of distinct person, where you are making supply to your branch, and that is also a supply for the purpose of GST. We have to keep that thing in mind. With that, we can move to the next slide. Okay, so firstly the identification. So identification is a scenario. One is very clear case that it is an output supply and you need to discharge tax, and that is number one, supply of goods and services for consideration. If you are supplying goods and services, you are taking charge for that. Nothing doing unless and until it is exempted, you need to discharge tax. Number two, it says toleration or refrainment for a consideration. So basically, if you are tolerating an act of a person, and for that toleration you are receiving any consideration, or for that refrainment you are receiving any consideration, that is liable for tax. So take an example of non-compete agreements where you are refraining from doing any particular activity and you are taking consideration for tax, you will be liable for tax. So not only the positive acts but also the negative acts for consideration are liable for GST. Now, number 3 is transaction between employer and employee, and it says even without consideration. So in GST, employer and employee have been deemed to be related, and any transaction which is happening between related persons would attract GST even if you are not charging anything for that. Now, if you remember my example where I was discussing renting of cab and then providing transportation services to your employees, I said that if you are recovering anything, so therefore you will be entitled for credit. But if you are not recovering anything, the service has been supplied in the course of employment, so you will not be able to take credit. So now your question could be why? Because you are saying here even without consideration it is taxable. So this is something which has been clarified by department through various circulars, and also this is a position which has been taken by the court, where they say that anything which is in the course of employment, that particular facility that you give to your employees without recovering anything, no tax would be applicable on them. Coming to the fourth, it is cross charge and stock transfers. So if the transaction is happening between two GST registration of the same entity, you are required to discharge tax. So one simpliciter case is stock transfer, where you are sending goods to your depots. Other example would be, for example, you procure laptops centrally. You put softwares in that, you configure your particular system, and after configuring the system, you send it to various branches. Now again, when you send your laptop, it is a supply. You need to discharge tax on that. Other example could be cross charge. So you have your head office. Head office is incurring various expenditure. Head office is providing various services to the employees sitting all across the branches. For example, HR services, administration services, managerial services. So for all those services, and for the salaries of the people who are sitting in HO is required to cross charge the branches and charge GST thereon. So these are the transactions which are notional. So basically, there is no consideration. In commercial parlance, there is no supply also, but for GST purposes, it is a supply and you need to discharge tax on that. And the last one is permanent transfer or disposal of an asset. Take an example that you bought a laptop, use it for a few years, and thereafter you are scrapping it. There is no value left to the laptop. At that time, if you have earlier availed the credit, you will be either required to make a reversal of your credit in the prescribed manner, or you need to discharge tax on the supply, even if you are not charging any consideration while disposing of your assets. So identification of outward supplies is very important, because there are certain transactions which in the business parlance would not be your outward supplies, but they are notional transactions on which GST is applicable, and therefore you should be mindful for that.
Surbhi, sir, here you mentioned a point that GST is payable on toleration, right? So whether when one company pays damages for delay in supply, is that payment considered as a toleration of Toleration Act?
Okay. So this question recently has been examined by in various advanced ruling authorities, and all of the rulings are against the SSC, where they say damages that you are recovering from the other party for delay in performance of your role, delay in deployment of resources, manpower, etc. All these liquidated damages sort of things, they are liable for GST, because they are you are tolerating the act of delay. So, but again, advance rulings are not binding on people other than the person who is sorting it, who is seeking the ruling. And also, it is known to everyone that in GST, constitution of authority is such that all of them are departmental officers. So nobody is independent judicial officer therein. So it is bound to be negative. But we have certain recent High Court decisions, because similar kind of clause was there in service tax also, and they have ruled that this toleration should be intended toleration with the consensus of the parties. It should be the desired outcome. So if there is deterrent penalties, you are not looking for that particular act, but it is one of the clause of the agreement which is in the nature of deterrent penalty or damages for the loss incurred, then no GST would be liable. So it is a litigative area, but so far all the high courts have been positive.
Okay. Okay, thank you, Surbhi. There's one more question actually. It's not particularly related to this slide, but there was a question asking if a company does a bad debts write-off, right? It does a write-off of the bad debts, and it will already pay the GST on that. Is there any remedy for that? Is there anything they can do to recover that?
Okay, so basically for bad debt, there is no adjustment given in the provisions. So the credit note provision is not applicable for your bad debts. If you extend some kind of discount after negotiation, for that there is a adjustment from your output tax liability, but not for bad debts. And also that would be hit by the timeline of September.
Okay, okay, thank you.
Now coming to the next topic, which is rate of tax. Now, to apply the correct rate of tax, it is important that firstly you understand the nature correctly, whether it is a goods or service, and if yes, it is a goods, so what is the nature of goods? Take an example of treatment of inpatient in hospital, where during the course of treatment, certain kind of implants, etc., are supplied. So take an example of knee implant or stents for heart surgery, etc. Now the value of these implants is significantly high as compared to the value of the service of the doctor. Here, this particular issue has been raised before various courts, and the view is that this is the service only, and those plants have been used in the course of healthcare services. So healthcare services is exempt. Therefore, the implants, etc., which have been supplied during the surgery, they'll also get exempted. Now, the other relevant portion is example would be printing and installation of billboards. Now, when you give a contract to a supplier for printing and installation of billboard, a question may arise whether the service is the supply of service, or whether the supply is supply of good, which is the billboard. So you will have to see the nature. Okay, so here a question may arise. So basically the contents are given by the recipient, whatever they want to get printed on the billboard. And the billboard is merely displaying the content. The intention is basically to get the printing of those contents. Therefore, it would be a service and the goods would be incidental. But there can be, if you keep changing facts, my answer would be different. There are a lot of examples which have been given on printing by the department itself in its circular. There have been certain cases also. So what if it is the printing of the book? What if it is the printing of a calendar? What if you are getting a logo printed on say pen or diary, etc.? So you need to analyze the nature in each individual case. You will have to see whether printing service is incidental or the goods are incidental. So it would be a bundle. Now, when I'm discussing about the bundle, it is important for me to highlight that supplies can be made in two fashion. One is naturally bundled, other is artificially bundled. So naturally bundled, the example could be airlines which is supplying flight service, which is a core business, and they are giving you in-flight catering also. Now in-flight catering is naturally bundled. Now how do you determine whether it is naturally bundled or not? It is not specified in the law itself. There have been foreign jurisprudence on that. There are certain cases in Indian context also where various factors have to be taken into consideration. What is the intention of the customer? Which is the principal supply? Which is the incidental supply? Which enhancing the enjoyment of the principal supply? What is the industry practice, etc. So keeping those factors in mind, it has to be determined whether bundling has been done naturally or artificially. So artificially would be the example of gift hamper, which contain fruit juices, chocolate, cookies, etc. So no item is enhancing the enjoyment of other item, or are all are principal in themselves. Therefore, the bundle is artificial. So these kind of examples are where you have intentionally bundled certain classes of supplies. Now there can be few cases where you have bundled it without even getting aware of bundling. So the example would be that you run a promotional scheme that if you buy 4 cars from me, I will give you a gold coin, like that. So now you think that you are giving the coin for free, right? And therefore you will think that as per section as per the provisions I have also discussed, that gift you are not entitled for any credit on the gift, so I'm not entitled for credit, that's it. But what if I now discuss about bundling? So the concept of law says that nothing comes free in the business. So gold coin is not actually free, you have bundled it in the price of car itself. So whatever you have charged for 4 cards and 1 gold coin. And it is not a business practice of distributing the gold coins always with the car. Coin is not enhancing the enjoyment of the car, therefore it is artificially bundled. So whatever is the higher rate, that would be applicable on the entire bundle. So if the the GST rate on coin is higher as compared to the car, then the entire bundle would be taxed at a higher rate. So you have to be very careful whenever you run promotional schemes. You have to keep in mind that to buy 2 get 1 free, buy so much and then you will get these things free, those kind of business promotion. You need to see that whatever you are giving free, that should not attract higher rate, otherwise the entire bundle would be taxed at a higher rate. So we can move.
Surbhi, there is one question here. So if a vendor charges me a wrong rate of GST, right, is there any implication for me because of that?
Okay. Luckily, to that extent, they have not built up some law in GST countering the earlier decisions. So
Okay.
that the position is assessment cannot be reopened at the end of the recipient. So in the sense, if they have charged me a wrong rate, I'll be entitled for credit of that particular rate. So assuming that they have charged you 18%, whereas it was liable for 12%. So they can't ask the recipient to reverse for 6%.
Okay. Sorry, one more question. If what would be the GST quantum on an asset destroyed during fire or due to breakdown? Is there some rules regarding on that?
Okay. So what assets destroyed in fire? Now, if you recall, in the negative list I was discussing, Vishali, can you please go back to that slide? Okay. So read the first bullet. It says goods lost, stolen, destroyed, written off, disposed of by way of gift or free sample. So lost, stolen, destroyed. The words have been used in a broad sense. So whatever got destroyed, it can be your raw material, it can be your finished goods, it can be your capital goods, your asset like laptop, etc. So the treatment for all of them would be different. So if it is your finished goods sort of thing, then you will be required to reverse the entire credit. whatever you have availed. But in case it is a capital goods, there are certain arguments available to say that you have already used that laptop in your business and it got destroyed after certain point of time. Therefore, you should reduce at a you should reverse it at a reduced rate.
Thanks, Surbhi.
Now coming to the credit note provision. So credit note provision is there for listed scenarios. It is not the case that wherever you want to reduce the value of your supply or the tax amount, you can issue the credit note. And what are the listed scenarios? That the value, you have charged the excess value, you have charged the excess tax, there is a sales return, or the goods or services that you have provided, they are deficient. So these are the scenarios where you can reduce your tax liability by way of issuance of credit note. But your reduction of liability would be based on a condition that your recipient should also require to reverse the credit that he has availed. Now, if you see carefully, they are saying sales return, but they are not saying service return. They are not saying cancellation of service. So what happens to those kind of scenarios? It has been a question in and pressingly for those industries where cancellation happens, say post September. This kind of adjustment of credit note is available by return of September month or annual return, whichever is earlier. So effectively September month. Take an example of construction services. Construction services, construction is not completed in year. It takes years together. So cancellation may also occur after couple of years. So firstly, the credit note period has already gone. Secondly, cancellation of service is not one of the listed criteria. But here department has issued beneficial circular and press releases are there which are saying that you will be able to adjust the tax liability with credit note. But it has to be clarified here that the time limit of September is still there. So this is regarding the credit note. But one more thing about the reporting errors I wanted to highlight is credit note basically has impact on your tax liability. It results in reduction of tax liability and not in increase of your ITC. So I have seen practically that the amount of credit note sometimes industry is taking while reporting their ITC, and then the mismatch is arising. Therefore, you have to be careful that the adjustment is made in your tax liability and not ITC. Okay. So basically, I have been given a difficult task in the sense that there are so many things which can be discussed around each of the concept. But since there is a time limit, I am just taking up few of the transactions which practically I have seen that the companies are missing out. So on valuation also, I am just highlighting one area of concern. Basic rule is when you supply for a consideration, the rule is that the price actually charged, that becomes the value for the purpose of GST. But I had also mentioned that there are certain transactions where even if you are not charging anything, you need to discharge tax. For example, transaction between two registration of the same entity or related party or employer-employee, etc. So there they say open market value in general. But if the recipient is entitled for credit fully, then any value. Now the transaction which I have seen that people missed out is using of the brand name. Now imagine a scenario that you are the subsidiary in India of a holding company situated abroad, and you are using the brand name of your holding company. You are not paying any royalty to your holding company for usage of that particular brand name. But still, since holding subsidiary companies have been deemed to be related under GST, and take an example of HO and branch also, they have also been considered to be different persons in GST, even if they are the part of the same company. So for that, you need to put some value for the usage of brand name and need to pay GST under reverse charge, because I had discussed that import of services is liable for reverse charge. Next. Okay. So now time of supply. So here I would simply highlight one point, that there are rules around time of supply. For example, for goods, it is the delivery of the goods. So what is the relevance of time of supply? So whenever I supply the goods, in the subsequent month return, I need to, in the return that you will be filing in the next month, you need to discharge tax thereon. That is the relevance. There are rules around it. So two things that I wanted to mention, which I have seen that people are doing incorrectly, is that there is a timeline of 30 days which has been given for issuance of invoice in case of services. So whenever you render a service, you can raise invoice within 30 days. But I want to mention here that this 30 days time limit is not available in case of continuous services. For example, you are providing construction services and there are certain payment milestones. So at each milestone, you need to discharge GST. You can't take 30 days buffer for that. Otherwise, liability sometimes triggers, the interest liability triggers in crores. I have seen practically. And the other thing is e-invoicing. We have discussed that now the company is having turnover more than 100 crores would be required to issue e-invoice for B2B supplies. Now the question would arise, what is the timeline available to me to get IRN generated, invoice registration number generated through the portal? So can I generate IRN subsequently? So the answer is no. So whatever time is available for issuance of invoice, that is including the requirement of IRN generation, because without IRN, your invoice itself is non-existent. So that has to be kept in mind, that whenever you supply your goods, they should be accompanied by e-invoice having IRN on it if it is applicable, and likewise for services as well. Next, hire to retire. I'll stop it here for a moment and check with the panel that how much time I am having, and accordingly I'll wrap it up.
Yeah, Surbhi, I think we can go on for under 10 minutes. We have time.
Okay, fine. Thank you. So hire to retire, next slide. So basically I was discussing that employer and employee, they have been deemed to be related into GST regime. So what is the implication? Any transaction between employer and employee would be taxable. Now, the question is whether the salary that I get from a company, I need to pay any GST on that if it is exceeding the threshold. So my answer to that would be no, because they have carved out an exception, and they say services provided by employee to employer shall not be considered to be a GST supply. But this exception has not been carved out for a reverse situation. So, meaning thereby, in case the company is providing any service for the employees, that would be liable for tax. Stating that, the next question would be, you have also said they have been deemed to be related, and even if I am not charging any consideration, I am not charging any consideration for various kind of services that I am providing to my employees, say transportation services, catering services, catering in the office or the factory, insurance services. I am not recovering anything from my employees, but since they are related, do I need to discharge any tax thereon? So my answer to that would be no, because all those kind of services are in the course of employment. So the relationship of service provider and service recipient is absent. But in case you recover something, so on that recovery, you will have to pay tax, because your relationship of employer-employee converts into the relationship of a service provider and the recipient. Come back, Vishali. So I'll just give a quick example on insurance service. So what we have seen practically, that company gives insurance services to the employees. They say that up to this amount, we are getting the insurance done for you. We will not recover anything, but for the top up amount, we would recover. and say, but for the cover of your family members or dependent, we would recover. So in those scenarios, the question arises whether I'll be required to discharge tax on the recovery for the dependents of my employee, for the recovery for the top up amount. So we have cases to the effect that company is only facilitator. The insurance services is provided by the insurance company only. Since you are not the provider, therefore no taxability and accordingly no ITC also, because in the negative list we have seen that these services are in the negative list. Next.
Surbhi, there is one question here which is coming up very often about the notice pay recovery taxability. Is there tax on that?
Okay, so Radhika, we were discussing the toleration of an act where I was saying that we have High Court decision saying that it should be an intended outcome. So notice pay is again not an intended outcome. Your employer is not looking for a scenario where the employee quits without giving the notice and you recover the notice pay. And we have decision on this particular aspect also, and therefore no GST, but again it is very litigative.
Okay, thanks for that. That was a very frequent question coming up in the box actually.
Okay, so now logistic and supply chain management. So here my endeavor is not to guide you on how GST becomes applicable on logistic arrangements, what are the scenarios which are taxable, what are the scenarios which are exempt. That is not my attempt. My attempt is to depict a scenario how GST is affecting your business for minor compliance breaches. Next slide, Vishali. Okay, so there are provisions in GST like 129, 130. Sorry for quoting. I was avoiding to quote any sections. So we have certain provisions in GST which says that when you transport your goods from one place to another, you should need to have a e-way bill, of course, in applicable cases, and e-way bill should carry certain particulars, prescribed particulars. Now practically we have seen lot of cases. In fact, post GST, most I would say the quantum of writ in on this particular topic has been the highest, because every day even in newspaper you'll read that some goods have been detained on so and so fault, etc. So vehicle number, there is a typo error, they'll detain your vehicle. Some misclassification, they'll detain your vehicle. And can you imagine what is the quantum of penalty here? Till this budget there was equivalent penalty, therefore the tax amount. In this budget they have proposed to double the amount of penalty, so it is like 200 penalty for in case of detention. So either you need to furnish a bond or you need to pay the amount of penalty, thereafter only they'll release your vehicle. Now what is the major trouble is, what I wanted to highlight here is, see, on these issues you may rush to the High Court, and that is practically happening, and High Court is continuously giving relief, but it is my day in day out, it is my core business. So in case they detain your vehicle, your entire supply chain breaks, because then to get it released it will take few days, if not few days, at least few hours, and goods may be even perishable, etc. So here two things are very important. One, to train your transporters. It is very important, at least that you tell them this is the time available for transportation of goods. In case there is a breakdown in the vehicle, they need to immediately report it, so that from the back end you can extend the validity. There have been so many cases where they have detained the vehicle because the e-way bill was expired even by few hours. So in that case, midnight also there have been detentions. So it is very important. Number one, you should check that e-way bill is carrying all the particulars correctly. Number two, your transporter should be properly trained, that in case of any sort of for example, there is a particular time given for the goods to be transported, you need to convey that if the time is expiring you need to inform us, like that. So these are the compliance breaches where the effects are significant. Minor breaches, but you will have to rush to the high court. So better would be that you build some control around it rather than rushing to the high court every time. Next. Okay, so I just wanted to give you a flavor of how operations can be structured. Next slide. So I'm just quoting one example. Take an example that you are a soft drink manufacturer and you have your dealers and distributors across the states. You want to give them fridge wherein they can store the bottles. Now you can give the fridge in and color it differently. Number one, you can say that if you buy so many bottles from me, I'll give you a fridge free. So this is supplied as mixed supply. What I was discussing earlier, that buy two get one free. So whatever, if you say your fridge is depending on a particular quantum of purchase, then in that particular case, it would constitute a mixed supply, and the entire bundle would be taxed at the rate applicable on the fridge or the cold drink, whichever is higher. So this is one. So ultimate aim is to give the fridge to your dealer distributor, but I am telling you how you can execute the same transaction differently, and each of them would have separate tax implications. So it is very important how you execute the transaction, what is the intention of the party, and how you execute your contract. So other is consideration for promotion services received. You say that you need to do XYZ task for me, and for that I will give you a fridge. Now your dealer is providing you promotion services, and the consideration is basically uh, in the form of a fridge, non-monetary consideration, and your dealer distributor, they'll have a liability to discharge tax on the supply of the fridge that ultimately you only are going to bear. And the other would be transfer of usage rights. You say that okay, I am giving you a fridge for till the time of continuation of dealership or up to this year. After that you need to give back the fridge to me. Now number one, you will be entitled for credit on the fridge. At the same time, you need not pay any GST at the time you are supplying it to your distributor. When you keep the control with you, there are certain return clauses in your agreement. Now the next is promotional item. You don't say anything. You simply say, okay, you are my dealer. By virtue of being a dealer for me, I am giving you a fridge free. Now your ITC on the fridge is gone. You need to reverse because it becomes a gift. So I am saying that ultimately what you are giving is a fridge, but you have colored it in different fashions. So whenever I'm saying coloring, I don't mean that you do something else and you merely put a name which is different. I'm saying your intention should also be aligned with the contract, but it can be structured. Next, reporting and compliances. So I will just touch upon one example. Vishali, next. Okay, so earlier we used to think, even if I am not filing my return, even if I am filing my return with a delay, what happens? I need to pay the late fee. I might be required to pay some interest for delayed payment, etc., and nothing more. But now that is not the position. It would have severe impact on your business. For example, it says that if you don't file your GSTR 3B or 1 for 2 tax periods, your e-way bill would be blocked. So what is the impact of blocking of e-way bill? You will not be able to supply your goods at all. Your supply chain itself would be broken, because if you supply without e-way bill, your vehicle would be detained. Okay, so you need an e-way bill, but you have not filed your returns. So filing of returns has major impact because it is required for efficient running of the business. Otherwise, the business would be choked. And secondly, we have already discussed about blocking of credit ledger, etc. So return filing, not only your return, but also your supplier's return is important for you, because if he is not filing return timely, etc., your credit would be blocked. You will not be entitled for credit. And in some cases, there are certain penal provisions around it. So Radhika, with this, I'll stop here. and we can take up questions.
Yeah, I think I asked most of them as and when it was going, but I think one question which has been asked is, there are a lot of chartered accountants in the company who are authorized signatories, right, for their filings of GST in the various states. So they're just curious to know as to what will be their liabilities in case the company is not compliant, you know.
Okay, so I am understanding where this question is coming from. There have been recently so many arrests and inquiries with higher management. So basically, provisions for harshest penalties and prosecutions, they are present in those scenarios where there is evasion of tax. It can be various. For example, you are supplying goods without issuance of invoice, or you are issuing the invoice but there is no corresponding supply, or you are availing ITC in breach of the provisions, or you are collecting the tax but not depositing with the government. So these are few scenarios. Now it doesn't say okay, so if you are a proprietor, the case is clear, you are the person who arrested. But what about the companies? In companies, who are the person liable? So your question is basically on the authorized signatory. So I'm just trying to give a background. So it says that the persons who were in the with whose consent the offense was committed, it can be any director, manager, secretary, or so even authorized signatory, because they are signing all the forms, all the returns, they'll be liable for prosecution or penalties in case they are not established that they were not aware of the transactions. So you would need to prove that it was without your knowledge, without your consent. Then there is an escape for you. But otherwise, it can be even authorized signatory, it can be a director or secretary.
Okay.
Radhika ji,
Okay.
if I may add one thing here.
Yeah.
With the clear concept of separation of a company from its directors, etc., is now being increasingly given a go by. If you see section 89 of the GST law, it would say that if any tax, interest or penalty due from a private company in respect of any supply of goods or services or both for any period cannot be recovered. If it remains in non-recoverable, then every person who was a director of that private company during such period shall be jointly and severally liable for the payment of tax, interest or penalty. And then there is a single escape route saying unless he proves that the non-recovery cannot be attributable to any gross neglect, misfeasance or breach of duty on his part in relation to the affairs of the company. And likewise, there is a similar provision even for partners of the firm. So I think it is becoming very important not just to safeguard, but rather to ensure that the due taxes are paid. And otherwise, there is a huge amount of liability on everyone who is into the hem of the affairs.
Thank you, Puneel. Just one more question, Surbhi. Let me just ask one question. If the sales return has happened the same month, still do we have to raise a credit note, or can we directly cancel the invoice? This is a very practical question. I think this is one thing you can answer.
You can directly cancel the invoice.
Okay.
Provided if it is not an e-invoice. For e-invoicing, you have been given a window of 24 hours for cancellation.
Surbhi, is it okay to remove the slide presentation now so that we can all?
Yeah, sure. Vishali, can you please remove it?
Thank you.
And there is also one more suggestion from one of the audience here, who say that now the internal audit team has to be really proactive. It has to follow a very proactive approach and not do a post-mortem, because now the risk on the internal audit is higher because of the regulations of GST. So this is something for all of us to note.
Radhika?
Yeah.
Sorry, I missed your question. Can you please repeat it?
No, this was not a question. It was just a statement made by one of the directors on some of the boards that internal audit function should be very proactive going forward. Yeah.
Yeah, I agree completely.
So I think that's most of the questions we've asked during the session itself. So I don't have any other questions on the chat box. Probably we can just ask our experts, Mr. Puneet and Mr. Vipan, to add their views and to the speakers' views and cover any other topic which they would like to.
Yeah, if you, I would like to add something on the ITC.
Sure,
because
sir.
that has been one of the prominent, say, in the GST. I think when GST was brought in, it was brought in with a very clear-cut objective that cascading effect of taxes will be removed and seamless credit will be available. Now, actually, when we see the law, firstly, they have put complete blockage on certain credits, which are very major credits, like construction of immovable property, motor vehicles, except under specified circumstances, and all other items Surbhi has already explained. But you see, if we see this, it has got a very construction, particularly blockage of credit on construction. It is having a huge, substantial impact on the cost of the project, because you are not availing the credit. Ultimately, you are using those premises for carrying out your business activities. So this is, we fail to understand why this credit is not available. And now, even if we are coming to the credits which are available, they have put certain conditions. Surbhi has already explained 4 conditions are there, but out of those 4 conditions, I will take up only 2. One is regarding tax paid by the supplier to the government, and the supplier has furnished the return. Okay, we can check somehow the supplier has furnished the return online. But what about payment of taxes? See, if I am raising an invoice to somebody, how the recipient can make sure the tax has been paid by the supplier against my invoice? Because the condition is tax is paid by the supplier to the government. He can never make sure, because the payment is made through 3B, and 3B doesn't have any details of invoices against which tax has been paid. So this is one of a very difficult condition to fulfill by the buyers. And then, so the generally in the trading community, traders and all industry enterprise, they were all taking credits on the basis of invoices. Then to plug in this, they brought in Rule 36(4). They put the condition you cannot take 5%, more than 5% credit of whatever total eligible credit is available to you at present. Firstly, this condition was 20%, then they reduced to 10%, and now it is 5%. And now, when they could not control it, then they brought a new amendment in the proposed amendment in the budget, wherein they have categorically now put it in the statute. You cannot take any credit unless and until your invoice is appearing in maybe in the form which they have prescribed. Now that means this 5% ad hoc credit is also not eligible to you. Unless and until the invoice is reflected, you cannot take the credit. That means what? That means whenever we are making an internal audit team, or any team is, say, looking after these procedures, I think now we need to make systems in such a way so that we can keep track of all these amendments taken over a period of time, so that no credit is taken wrongly by the company. We can keep track of those changes by keeping, say, date-wise record of the amendments, so that during which period we should take care of which aspect of the law. And then I think coming to another issue, which I think now has become very, very relevant for the exporters, because I think this is also a very, very important issue from the working capital point of view. See, previously exporters were eligible to export. They were having 2 ways to export, either to export under LUT or bond, or through payment of IGST by utilizing their ITC available. Now, with the proposed amendment in the budget, I think this scenario has changed. LU2 bond is available to all the exporters, but for payment of IGST, government is going to notify the class of persons or class of goods which will qualify for this. Now, you see, if the industry or the traders which are not covered, which will not be covered by this notification, and they have to pay GST and take credit of take a refund of that from the department, it is going to create a lot of problem. The refund, everybody knows, it's not easy to take a refund from the department. It may take 4 months, 5 months. Even if we take a, say, moderate rate of 15 to 18%, 15% even on the purchases, that means if the credit is blocked for a 4 year or 4 months or 5 months or 3 months, that means, and that means it is going to have a huge impact on my working capital. Maybe if we see over a period of time, my 1 month's capital will be blocked against the purchases. So I think this aspect needs to be taken care while making our cash flow. Internal audit team should make or say may some suggest ways to how to say assess the working capital requirement of the company. This is what I mean to say, and this will also, I think, result in, say, if you go for refund from the department, it's going to cost to the companies. It's not going to come so easily. Professional cost will be there and manpower wastage will be there. And previously they were getting all those credits automatically. This, though initially there was a problem, but now the system was very set. Now due to, say, few people who are indulging into wrong activities, maybe there are 4%, 5%, 2%, 95% people have to suffer because of them. The government should make sure they should keep track of those people, not harass 95% people. That's my, thank you.
Yes, Vipanji, and I think you have already made some representation also to government. I think Puneel will share his
Puneel
views.
is going to take that part, so I have left that.
First of all, thank you to the whole BVSS Bangalore team for organizing such a beautiful program. My dear friend Naval ji, President BVSS Bangalore chapter, Radhika ji, Sivaram ji from BVSS team, Narinder ji, convener for today's program, and Surbhi, Vipan sir, President of BVSS, and all the dear friends who have joined us in this program. It's really a very important aspect for the internal auditors to keep themselves abreast with these indirect tax laws, because they have now become all the more all-encompassing. Every transaction, whether it be on the purchase side or on the sales side, is now affected by GST. In fact, one of the questions was, what if the supplier is not charging the correct rate of tax? What impact can it have? I was just going through that question. That itself shows the anxiety of all those professionals who are involved in this field. So, and another issue that was raised by one of the attendees was that what about the internal controls? Should internal audit be about the postmortems, or should there be controls in the first place? So the first thing which I would like to highlight would be that with all those issues which have been very aptly highlighted by Surbhi ji, and thereafter Vipan sir has also highlighted some of the aspects, it has become very important to run the function, run the business with systems. We must have complete systems in place. We must have those controls in place, those reconciliations in place. And what the government has very peculiarly done has that they have created a lot of interdependence between the businesses. One of the questions that came from someone during the program was that, what if, how to ensure that the supplier has shown that in his return, or how to ensure that he has paid the tax? All these questions we cannot answer in the manner which leaves no room for doubt. But if you have the best system in place, which shows that you have done whatever you could have done, that saves you from a lot of liability. And then I would like to remind you of a very famous line which was used by Justice Mishra in a Supreme Court decision while he was dealing with a similar controversy under excise. He said that you cannot ask the assessee to run from pillar to post to confirm whether the suppliers have paid the tax. So number one, I would like to emphasize that we all need to have those internal controls in place. The supplier's KYC has become very important. Now you cannot anymore rely upon your phone calls showing that I have purchased from someone, Mr. X. Many of the businesses where there are agents who help in purchasing and selling, they are facing a lot of difficulties because a person, the business deal with the agent. Real suppliers are someone who they do not know. This is going to create a lot of problem. As internal auditors, we all need to ensure, all those who are involved in this field need to ensure that the supplier's KYC has become extremely important. I have dealt with number of prosecution cases on GST, and what the cases that prosecution built is that you have made a payment to Jupiter Exports, which has a PAN number so and so, whereas the GST number is of some Jupiter Enterprises. So the name Jupiter is similar, invoices is coming from someone else, payments are being made to someone else. And when we talk to the promoter, they say that there is some Mr. XYZ with whom we are dealing. They are only, he has identified those and we have simply made the payments. That is going to create a lot of difficulty. Surbhi has already highlighted a very important aspect, which is indemnities. So you need to ensure indemnities and contract clauses where either you don't pay unless he pays and gives you some evidence. But the difficulty is that today there is no mechanism to ensure that the payment he says he has made is on the sales which he has made to you. But then whatever best has to be done, can be done, has to be done. Then one more thing which I would like to highlight is that initially Radhika mentioned that the government is working on artificial intelligence. And I am telling you, friends, that they have information much more than you could have thought. It is now not a case where government is just having the data. They have system to extract meaningful information from that data. So you all need to be very, you cannot anymore think that government doesn't know. Assume that it has all the means to know and then put your systems in place. That's a very important aspect. I still remember Tulsidas in Ramayana says that Dharti or Prithvi is like a small, it's like a small potli which is hanging, and then the rest of the world. So it's like government is easily able to, can easily see what is happening in the businesses. They have so much data, they have so much information. You have to be very careful. Now you cannot make them, no one can assume that they don't know the facts. Then I would like to mention two things, that from BVSS side, we keep filing representations on issues which are of importance, issues which are of which needs change, or where the government needs to understand that the businesses are on a different footing than what they understand. So I would also mention that we have recently filed representations regarding this, the change on audits. We have filed representation or post-budget memorandum we have filed. We have been actively taking part on the aspect that GST tribunal should be independent. One of the issues that arose was regarding the non-independence of these advanced ruling authorities, and that is why there is no faith of anyone into the advanced ruling authorities. Likewise, even in the GST or any tax for that matter, the first neutral adjudicator is the tribunal. But unfortunately, they have brought in a tribunal which is extremely biased, which represents mainly the government and the bureaucracy on that board in the majority. So as BVSS, we have taken this matter to the court. There have been interim orders passed in that matter. We have been writing actively to the government. We are again and again bringing to their attention. We are again going to give another representation that it has been almost, GST is going to complete 4 years and you don't have an independent, impartial adjudicator. So we also as internal auditors need to consider this aspect, that if tomorrow there is any exposure, you do not have anyone to whom you can independently explain. So you have to be even more careful. And the last word that I would like to say would be that a very effective means of communicating your problems is to put them into writing. So if you are taking some stands because of some practical difficulties, or if you are taking some stands because you understand the law can be implemented in that manner, or you understand that this is the way the law is to be interpreted, but if there are gray areas, put them into writing, give them to the highest authorities up to your jurisdictional authorities level. That will always show your bona fide. and that will always help you navigate through the difficult stream if you are tomorrow set to be caught on a wrong foot. So many times what happens is that these investigative authorities, they have, in the name of avoiding, I would say, tax evasions, they have been given too much of an authority and power. So if tomorrow, even in cases of interpretational issues, even in cases which you might be feeling that they are well settled, or you might be feeling that this is the correct position, when they come to you, they harass so much and they tend to impress what they think so much that what comes to your rescue is that you have already informed the position that you have taken and also given the reasoning for that. So this I have found in my career of more than 15 years and fighting so many cases, I have seen that whenever you write and make representations of your point of view, and you invite suggestions from the department, and you all know that unless they come to your place, they will never give you suggestions. These are all letters written unilaterally. I have never seen them reverting to you. So if that be the case, these letters really come very handy to you in those situations. So that can be a very handy tool for the internal auditors and for all those who are concerned in GST compliances. And also it helps you to dispel the anxiety that you are having, that how to ensure something which I cannot ensure. All right. Then you say that I have no means except doing this. This is what I'm doing. So put all those systems in place, communicate them, again and again write to them. And I will give you only one example, because examples tend to help us understand better that and to understand how it can be done. So take an example where the food is being sold on the railway trains. And you know, our Tamil Nadu Express starting from Delhi will cross at least 15 states. And even Attorney General was not able to opine as to whether and in which state sales tax is to be paid, whether it would be a interstate or an intrastate VAT or CST, which will be paid. So what we did for our clients was that we wrote representations at least 15 times to all the states concerned, to the empowered committee of state finance ministers, to the Indian finance minister, to the law minister. And we kept on writing not just representations, but reminders that this is the best understanding that we have, that we are not required to pay because we don't know how to pay. You tell us how to pay, or you make a mechanism how to pay. And ultimately, I tell you, whenever we faced with any adjudication and we showed those 500 letters to them in a file, I have never found any officer taking any adverse view of what we did. Even if we did not pay the tax, he was also not able to confirm the demands. So this is something which may help all those who are having anxiety, because the law is becoming more and more difficult to implement. So with this, I would like to again thank the Bangalore branch and all of you in joining us in this very informative program. And whenever you have any issues where you think that representations need to be filed, kindly feel free to write to the Bangalore chapter or to us, to any of us. It's a very family kind of an organization, doesn't have that kind of any hierarchical or any very, very systematic approach. You can write to anyone with whom you are in contact. And we can have very open discussions, and we are very keen to present all those issues so that we can improve these legal systems and make them more business friendly. Thank you. Thank you all.
Thank you very much, Puneel sir. And thank you very much, Vipan Agarwal. Naval, you want to take it from here? Mr. Sivaram, would you present some views?
Hi, there have been so many experts on this field that I can only say 3 words. The session has been great, superb, and tremendous. GST. That's all. Thank you so much.
Thanks.
So now I would like to thank everyone for coming to this session, attending it. It was a nice, wonderful session. Naval has been requesting this session for past almost, I think so, 2 months for conducting it. We want to have this session. We need to have this session. He was telling about the importance of this session. But somehow I was doubtful whether the CEs will be interested in listening to it or not. But the sort of the presence today I have, or we have, I think all doubts are removed. And the way Surbhi took it, it was wonderful. I really enjoyed. I have a book on this GST. I purchased it initially to develop my understanding. This book is some 2,000 page books. I almost have read around 100 words because you feel like, 2,000 pages book, how do I contain my interest and read it through? I'm not going to appear for any CA exam or something like that. I should read it. But the way she did it, presented it, really, it enhanced my understanding. I thank Radhika also interjecting, asking question in between and making it very, very interesting. The way it is taken, the way it is presented, as Sivaram also has written in the group stating it was a dull subject, made very interesting. It's made very interesting. I'm thankful to both of you. I also thank Vineet, Vipan and Punichi for their valuable insights, which only an expert can give. For people like us, thinking it and coming from that point of view is very, very difficult because we don't deal day in, day out with such sort of the issues and the problems. When you are dealing with such problems, such issues, naturally you will have a far more expertise than any of us. I thank them also for their views. And in case we have any issues, we definitely will come to them. I thank Sivaram also for sparing his time. One complaint, he came as a BVSS member. He's a governing member of CAE Center. And he hasn't mentioned it that he's also a governing member of CAE Center. So I introduce him as being a governing member of CAE Center. He has been a pillar. He has been basically the motivation also for the CAE Center. I thank him too also being present in this program. Once again, thank you everyone for sparing your time and coming and attending this program and making it a success. Thanks a lot. Thanks a lot.
And thanks to Narinder for connecting BVSS to the industry.
All right. Yeah. Thanks a lot.
Thank you all.
Thank you all. Logging off.
Thank you. Thank you all.
Have a good weekend, all of you. Bye-bye.